Today's mastermind is real estate conversations. And I think it's a really relevant meeting, and it came from one of our colleagues or one of our peers who was so excited to tell me how a mastermind we did probably 12, 14 months ago had changed his business. And believe it or not, he said he was going to make diamond this year. So I'm quite impressed. That's $1 million in GCI. And the real estate conversations is not real estate sales. It's not checking the boxes. It's having some genuine conversations and having a strategy or a purpose for having this outreach. Back in, I want to say, late 2021, beginning of 2022, I was doing classes about real estate as an investment opportunity when rates were ridiculously low. And we went through some examples where properties we looked at that many of us thought were not great investments were. And I remember the first week we had several of our agents had introduced properties that were examples to their clients and made immediate transactions. I know Robert Garber, who's a regular here, was one of the participants in that process. He had a condo in his neighborhood. He presented it to one of his clients looking to invest and put it together within a week. So this agent came to me. He didn't want to be called out because he didn't want everybody having the pressure of him making Diamond Club, but he said, I'm going to do it. And he said that he did 36 units in 15 separate transactions. Some of them are small commercial transactions that are still pending closing. But he attributed that to that conversation that we had on a mastermind over a year ago. And the conversation was talking to your clients about real estate as an investment opportunity or as a separate investment class. And I feel, if I approach it from the perspective of I want to make a commission by, calling all my past clients and saying, hey, do you want to buy investment real estate because it's in my best interest? I feel I wouldn't be effective at that. However, I feel I would be tremendously effective if I did it as a value add. And I said to some people, especially now where who thinks that the stock market feels pretty uncomfortable right now for investors? Right? I mean, this is very, very unpredictable. Real estate is tangible. Real estate is not going to go down by 70% like Meta stock or some of these high-flying tech stocks. Would you all agree with that? Yeah. So if you're a long-term investor, real estate's tangible. The inputs to build real estate are not going to be going down. The last I checked, they're not making any more real estate. And even if there is a recession in 5 years, you won't notice that. So we almost have a moral obligation to share with our clients that this is an option. And if we don't, and even if they miss out on an opportunity, I feel like we would be, we're not all we purport ourselves to be, because we're not just the person that can help them buy their house. We're somebody that can be their real estate agent to cover many different aspects of it. So this one individual I spoke to said these conversations were really easy because it was just about contribution and seeing if he could help them instead of make a commission. And he said that his goal was to talk to 10 past clients, current clients, or his sphere of influence on a daily basis. And he said it's almost uncanny that 2 or 3 of them express some level of interest. He has done some get-togethers where he got a group of people together and did a presentation, or he's addressed it individually. And it's been anywhere from a 12-unit commercial building on CoStar to condos in the neighborhood. And I'm gonna venture that there's a lot of us on this call that probably have neglected our I don't want to say responsibility, but I will say our responsibility to keep in touch with our clients by putting out a call. We might feel like we have some fancy text service and we do a lot of emails and we do some direct mail, but there's nothing that can replace a direct call saying, "Hey, Alexa, we haven't spoken in a while. I just want to reach out, see how you're doing. And I wanted to let you know what some of our clients have been doing and open up that conversation." So has anybody on the call been talking to their clients about real estate as an investment? And I don't mean investor clients. I mean like their residential clients and their sphere of influence.
No, I haven't done it. I call them I call my past clients in my my client database, basically to help. Well, our script is there anything we could do to help you buy, sell, or invest? That's how we put it to them.
Right. Now, to me, you're are you a Mike Ferry guy?
Yes, sir.
Okay. That's got Mike Ferry written all over on it. There's nothing wrong with it, Ron, but I just think that that call is designed to put to check a box on the board, right? Saying we put another unit on. If you make enough calls, you'll stumble across somebody who has that need, and that's all good. But I'm looking at it from a slightly different perspective, and the different perspective would be, hey, I just wanted to, the conversation is, hey, Ron, just wanted to check in. We haven't spoken for a while. Want to see if there's anything I can do to help you out. And by the way, that's like a Joe Stump thing, I think. By the way, some of my clients have been finding some pretty good deals investing in real estate as an investment class. Did you or anybody you know have any interest in getting educated how investing in real estate might work?
Rob, Trudy and I have been working with investors. I'm closing on something in a couple of weeks, and it's the second purchase for an investor. I'm possibly meeting somebody else this weekend as a second purchase for an investor, and Trudy's got somebody we're working with on Sunday who'll be her second or third investor in purchasing and then renting out the property. So we're quite active in that space.
I'm closing on one January, who's going to then list it for rent.
Now let me ask you, are you finding that they're fairly good financial investments just from your own perspective?
Yeah, we own 3 actually. And so long as you don't have to take a big mortgage on them, the returns are there.
And I don't know if Eric Funk or Jackie Haynes are on the call, but when they did an analysis on a property that they were looking at, they actually wound up buying it as well. And I think it was the spark was lit from the conversations we had 14 months ago. And I really think that this is not and Ron, I love you, right? Ron Piccolo? You're there, right, Ron?
Yes, sir. Yes, sir.
And my pivot to what your Mike Ferry conversation is the Mike Ferry conversation comes across to me as you're going through the list. You know anybody I can help looking to do this, or this? You want to buy, sell, or what was the dialogue that you use? If you don't mind sharing it.
Yeah, but when we call them, we just say hello. Mostly my son does it, but we use the Tom Ferry, not Mike Ferry, but the Tom Ferry kind of script, where it's if there's anything, is there anything we can do to help you with your real estate needs? They'll say no. And do you know anybody that's looking to buy, sell, or invest? That's how our script runs. So he changes it up depending on when the person actually answers the phone and what kind of attitude they have. So if they have a good responsive attitude, then he'll continue with saying, "Hi, this is Ryan. I'm with Remax, and we're just wondering if there's anything we could do to help you with your real estate needs." And they say, "No, not really." And he says, "Well, you know anyone that's looking to buy, sell, or invest?" And that's how that's our script that we use pretty much. That's a Tom Ferry, not Mike Ferry.
Fantastic. And Ron, you know, my goal in these is to expand your range, right? And to give you different conversations to have. And when I started the conversation about investing in real estate,
I can't hear Rye.
hold on, I'm gonna mute everybody. Hold on a second.
3 o'clock showing there.
So if you can unmute yourself if you want to talk. When I had it about 14 months ago, plus or minus a month or two, my passion for having that conversation was to get our associates at Remax Select intrigued and motivated to invest in real estate. That was my goal, okay? Because I care about everybody. I thought real estate was a really solid investment. I thought it was also a good motivational tool. So for example, Ron, you do a lot of training and coaching. If somebody has a vision, right? Some of the newer agents, they have a picture of a sports car they want to buy, right? And they're going to work really hard to get that. How about reframing that perspective and saying, let's work really hard to get a passive income stream. Okay, that's not going to depreciate. That's not going to get dinged up in a parking lot. That, you know, like something that's going to have some real value, or at least have a combination of those. That was my passion, my goal for having those conversations. And then I thought about it and I said, you know, if it's that important to me to share with everybody in the industry, we need a vehicle to share it with our clients. Our clients, our potential clients in our sphere of influence. And there is a magical thing that happens in real estate. There are two types of returns in real estate investing. Who knows what the two major returns that people ask for when they evaluate? There might even be three, but let's just say the two major ones. And assuming that they all have positive cash flow, there's two major returns. Who wants to give a stab at that?
Short term.
So, I mean, they're short term and long term, but so a lot of people, a lot of investors talk about a lot of investors talk about the cap rate. And what is the cap rate?
It's
What's
the
the
net
cap rate
operating income over the purchase price of the property.
Right. So it's the return after expenses divided by the purchase price, right? And Lauren, what's a good cap rate in your market if you're to invest? Do you have any idea?
I mean, I'd love to see 7%, but right now, I mean, if I'm seeing 4% or 5%, I'm happy.
Fantastic. And Lauren's new from our Advantage Plus edition. You want to just tell everybody where you're out of, Lauren?
Where I'm at?
Yeah, you're out of our East Del Rey, right?
Yeah, I'm out of the East Del Rey office. I've been with Remax for going on 17 years.
Welcome to the family, and thank you
Thank
for
you.
sharing. So when you talk about the cap rate is that you buy a place for $1 million. If it returns a $60,000 profit, it has a 6% cap rate. I would also talk to people about what the cash on cash return is, because if you are buying property for $1 million and you're only putting down 200, right? And you're borrowing money at 5% and the cap rate is 7, that extra 2% gets multiplied by 5 on your cash on cash return. Does that make sense to everybody? And then there's another
Just say that
return.
last part again.
Okay, so if you bought, let's make it a more practical number that people understand. Let's just say somebody bought a place for $500,000. They put down 200. They put down 20% or $100,000, right? If that property has a positive cash flow of $700 a month, right? And they put down $100,000. What do you think the cap rate on that is? Okay, so let's say it's $700 a month, so it's $8,400. You also have some principal repayment, right? Maybe that's another $4,000. So that's like $12,000 on a. No, I'm sorry, but and you also have to add back the interest of, let's say it was 5% on or 6% on 400,000, that's 24,000 plus 8,400 is $32,400 divided by 500,000 is a cap rate of 6.5%. But if they're making $700 a month on a $100,000 down payment, right? That's $8,400 annually divided by 100,000. That's 8.5% cash on cash return. Plus, they're amortizing the loan by about another 3%, right? Because you're going to pay it down by 3,000 or 4,000 even in the first year. And then you have to add back appreciation. So you see there's a little bit of complexity into this conversation that we're having. And it's not a misdirect. It's not a, I want to be tricky. It's, I really want to understand all the basics to have a conversation. So somebody who's, you know, looking to invest in bonds, right? If they have some money down there in Southeast Florida, they might be looking to invest in stocks, which is a little bit scary now. Or Lauren might give them a call and say, hey, there's another option that you have. You know, now that there's not 42 offers on every property, you know, if you're interested in investing your money in real estate, which traditionally has always gone up, I'd be willing to do some legwork and share you what those options look like. And if you can tell them what your return is, you know, positive cash flow. If they're an investor, they want to know what the cap rate is because they want to feel important, but that's basically just the return. And then you have to say, with this amount of money down, this investment, here's how much you're going to get back monthly. And here's how much you're going to pay the loan down. And over time, you know, in a 5-year horizon, you know, do you think, Lauren, that rates might, or property values might go down a little bit? It's possible, right? You're on mute. If you could just unmute yourself, Lauren.
I think initially they're going to come down a little bit, but I think over time, of course, they're going to continue to go up as we've seen.
So
in the cycle.
you know, even a bear on real estate is a little bit down, saying, oh, the market has to come down, right? It might come down a little bit, but in 5 years, even the bears in the business think that in 5 years, the values will be higher than they are today. Right. And if somebody says, I don't believe that, then you just go on next, right? Because this might not be the asset class for you to invest in. But I really feel like if we want to be their realtor for life, we want to be their real estate professional. I don't think we should only be the person that helps them buy their primary residence and somebody else introduces them to another asset class. Or in most cases, they're not getting that information. They're not getting that education from us. Okay. Does that make sense? So I believe, and I'm doing this because I believe it's something that is not right for everybody, but it's something that we should introduce to everybody and that we should at least have as much knowledge as they have. And I'm not saying we need to know how to operate a HP financial calculator, but I do think that we should have the partnerships and the connections where somebody can, you know, run the numbers on a 15 or a 30 year, tell them how much amortization there is in year 1 and year 5. And then we can take that information and basically present it to them in a non-financial expert manner so they can make a decision. Because over my career, you know, some of the wealthiest people I know are the people I just bought and held real estate. You know, I know somebody who their second, you know, the spouse got a second job. They invested all their money in real estate and they're worth more than $10 million. And the spouse was a medical doctor making significant money. And the amount of money that they saved from being a physician versus somebody doing real estate on the side, investing every penny they had there was profound. That second job, putting all that money into real estate, wound up creating 8x the wealth of somebody working as a physician for their entire career. So I think we have an obligation to have these conversations with people. I think the conversations kind of we have to take the edge off them from it being a sales conversation and take them into a conversation about this might be something that you're interested in. Okay, where can you get a 15-20% cash on cash return with real estate backing it. I don't think you can get it anywhere. I mean, cryptocurrency has already proven that some of these FTXs go to zero at times. So that might not be good. If you were in the high rolling stocks, what happened to them? Some of them are down 70%. So we have an opportunity to educate our tribe, our people on doing this. And this one individual literally yesterday came in and told me that, you know, he's going to do 27 transactions, or he did 27 transactions for 36 units. No, 15 transactions were closed for 36 units, and he was going to do 27 additional transactions this year from it. And he's like, I don't feel like I'm selling anything. I feel like I'm educating. I'm giving them an option to have a really sound financial investment. And this ability to leverage things is magical. Where can you put down, you know, 20% and get 100% of the appreciation? Very rare. Where can you get, even though rates have gone up, where can you get lower financing costs than borrowing on real estate? If you ever go to a bank for a loan, the first thing they ask you is, what kind of collateral do you have? And what do banks love for collateral, Lauren?
Real estate.
Real estate.
I mean, real estate has got to be the #1 collateral for lending and everything, right?
Yep.
They don't want to lend on stocks. They want to lend on real estate. So this is the conversation that I believe that we need to have. And I had one of our lenders was in our Morristown office yesterday, going with a new to us agent on the Emily Frisch team, and they were calling 2, 3, 4-year-old Zillow leads, and in a matter of 2 hours they made 4 appointments in 2 hours. And it was because they weren't selling. It's like, hey, how can I help you? You know, there's now more inventory. And it was the conversation and the way that they engaged that enabled them to get to that point, not just I'm just running through numbers on a multi-line dialer. They were hand dialing, having conversations where they knew the person's name. They were saying, you know, hey, Anthony, I just wanted to follow up. It's not like you get this 3-ring dialer, there's a pause, and you know that somebody's just running through numbers. It's like, hey, I want to see if I can help you. Okay. So the equation that was presented to me was 10 conversations a day, minimum 5 days a week, is going to be 27 transactions for this individual. And he told me, I don't want everybody, he's like, I'm going to make diamond for my first time in my career here at Remax. And I was like, that's the mastermind for tomorrow. That's why I felt like I had to share it, because it wasn't a sales pitch. And this individual is the most modest, you know, driven, but, you know, soft-spoken, you know, modest individual that you'll ever see, but he's just serving his clients. And he feels good about it. And I feel good about educating people and giving them that option. In Florida, did you have a lot of cash buyers, Lauren, in the past 2 years?
Yes. Most of them were cash. Yeah.
So there's probably a lot of cash on the sidelines where people are fearful about where to put it, right? Because
Yes.
they don't want to lose their money. But if they could have an investment in real estate, I think they'd be feeling pretty good about it. And the other piece that I want to bring out, and I'm just having this conversation with you, Lauren, because you're on here. I don't want to neglect everybody else, but I think a lot of times people think buying real estate means that, you know, I have to go unclog a toilet, and I don't want to be bothered with that, right? Do you think that there's a class of people who don't want to have it because of that reason? Like, my stocks never call me and say that the washer broke.
Yes.
Yeah. Yeah.
So when you calculate your return on things, Lauren, you include a professional management fee in there.
Yes.
so that you know, if you're managing it yourself, that's really an effort that you have to put in there. And I think it's really fair to have a conversation that, look, you know, you can do it yourself, or you can have professional management manage your property, meaning, you know, if you sold 27 units in the next year, you can decide that you want to manage them, or you can have somebody else manage them for us, but that's still a viable investment.
Yep.
So, you know, those are probably the biggest objections I have with people, is the understanding that, look, you could have a return that includes professional management to get you that return. I want to take a breather here for 1 second and welcome, Dan, are you on? Dan Brosna?
I am on. Yes, Rob. Hey.
So Dan has addition to his office, who is a team from a neighboring office, Chopper Russo. I don't know, Chopper, are you on? Maybe he's not. But anyway, Dan, welcome.
Yes, yes, I'm on, and so is Patrick.
So
Hi,
Chopper
everyone.
and
Welcome,
Patrick,
Chopper.
Chopper and Patrick, welcome to the Remax Select
Welcome, Patrick.
family. And Patrick, how long have you been Remax?
Myself, I've been with Remax for 5 years.
And how long's Chopper been here with us? I know he's been around a lot longer.
I believe he's been going on 13 years, Chopper.
Yeah, that's about right.
So I wanted to just welcome you and your team over to our Franklin Lakes office. You're in good company. We have 100 people from Southeast Florida that just joined us. And I also want to see if Christian Milo is on. Christian?
Hey,
Christian, are you on?
yes, I'm here.
So Christian came to us from another brand, and he's going to be helping us. Let me mute everybody here, Christian. Christian, if you can unmute yourself, please. And Christian is coming to us from another brand in Boca, and he's bringing a team, and he's also doing starting our iconic title service for Southeast Florida. And I just wanted to give a big welcome to him, and one of the hardest working people I know, and he loves what he does. So if you want to just say one or two sentences, Christian, please have at it.
No, I'm excited. It was a very hard decision to make, just because of the fact that I don't like change. So I was with Exit Realty for almost 8 years, and I met Rob, and the opportunity came at the right time, right place, right time type of deal. And I'm very excited to grow my business even more. One of the decisive factors for me about the Remax brand, because there have been other companies that approached me in the last year to move and to leave ownership of a brokerage, is the brand itself. I had Douglas Elliman reach out to me. Compass was poaching us real hard. But even though those are quote unquote luxury brands, Remax has it all in one. Not only that, but it also allows you to reach out internationally and reach out to people in the international market. So I'm very excited for 2023. I think that my numbers will double or triple from my average. So I'm really excited about being part of Remax.
So and just to close the loop, Christian is a top agent, and he also has a title insurance business that we've partnered with. So it's not just an affiliate. Christian's going to be a partner of our organization, and I'm thrilled to have him on board. He's a hardworking gentleman that we've worked with in the past. So welcome, Christian, and I'm going to take it back to the real estate conversation here. Thank you for going on camera.
Of course.
Denise, I'll just put a little memo out to you towards the end. So one thing about having these conversations is I really want everybody to understand to the highest possible level how to communicate this to your clients. And there might be instances where you might not be comfortable if they're going into like multi-unit commercial properties, and we do have resources to handle that. And again, I don't know if Eric Funk or Jackie Haynes are on, but we do have people here that specialize in it. I know Chopper and his team do some commercial. Cheryl Darmanin does residential and commercial. And one of the best things that you can get in this business, I don't know what's better. I'd ask you guys this question, but I see you, Corky, on camera there. I'm going to see if you don't mind just answering one question for me. What is better? Is it better to get a referral or to give a referral? I don't know if you can unmute yourself there, Corky.
Any referral is good.
I think you can be a winner with either referral.
Right.
So like Eric, when somebody calls you and says, I have a client of mine that wants to buy in your territory, you know, would you pay a 25, 30% referral fee for somebody that's ready, willing, and able and already pre-qualified? What's your answer?
Absolutely.
Right. So that's a good piece of business. Now, if you call down to Corky in Florida and refer her a $2 million buyer and you get a commission, you get a referral check for 8,500 in 2 months, that's pretty darn good too, right?
Oh yeah.
And I love your background, by the way.
You took it.
Yeah. So there's a peacock in the background from when Eric Funk and I went door knocking. Just a little backstory there, but anyway, so, and Jackie had a big referral to Cheryl, right?
Yes, it was quite nice. Jackie gave her the referral, and it turned out to be quite amazing, actually.
Right. I think the referral fee was significantly more than 10,000, right?
Probably 4 times that at this point.
4 times that. So we have a lot going on, and the reason I bring this up, Corky and Eric, and thanks for sharing, is, you know, if it gets outside of your comfort level for investing, don't fold. Like, we have a team around us that can, you know, help you. And my strategy is, you know, I don't know whether it's better to get a referral and work with a great client, or it's better to give a referral and then just get a check in the mail for basically making a phone call. I think both of them are very awesome, and I think both of them are definitely more desirable than spending thousands of dollars on mailers or Zillow or Realtor.com, hoping that something materializes, in my opinion. So,
Rob,
yes,
I really appreciate your analysis on the return on investment and cap rate and all of that. And for realtors, I think there's got to be a you know, keep it simple sort of stuff. So it gets to a point where I don't really want to discuss all of that, other than I want to get the real estate under contract. And I want to go back to what Lauren said before. I've been reaching out to my clients and finding out who wants to make investments and diversify their portfolio. And I'm finding that they're all interested in knowing more about real estate and real estate investments. So I used your last one that we bought a couple of properties, and Dave did as well. I think that I'm trying to explain those types of concepts to my clients, and they're very receptive, because I'm not a big investor, but we went into it and we're very happy with the investment. But more importantly, I have a client right now. We went under contract. We had to do a cash offer. We had to beat everybody out on the pricing. And I explained to my client that he can't look at it as how much he's going to make on this property on a foot basis. He should be looking at it on a 15-year horizon compared to all those other investments. And sure enough, we should be closing, in the next 2 weeks, and just waiting for a tank sweep. So, I mean, that's more real estate talk, but I got to keep it level with him. I don't really know if I want to talk about accountants. So I had him call his accountant. I said, speak to your accountant, talk to him more about cap rates. And if he tells you that if this is not a good investment, we'll just back out of it. Within 30 minutes, he called me back. He says, let's go. So I referred him to his own accountant. He's got money. He knows what he's doing.
Well, Eric, I thank you for sharing that. I think that if you call 10 of your sphere or past clients, there's at least 2 or 3 of them sitting on a lot of cash. Right? Because there was a lot of money that was thrown out during the pandemic, and there's a lot of money on the sidelines there. If people sold stocks because they were fearful, they're sitting on cash and saying, what am I going to do with it? And they might say that, hey, I think in real estate might be, overdone. It might be due for a small correction. And they may be right. But it's probably a significantly less risk than going into equities. And it's an asset that if you ask a past client, a sphere of influence, where do you think real estate's going to be in 5 or 10 years? I think you'd be hard pressed to find somebody that's going to say it's going to be lower in 5 years or 10 years. And I think the last time we had a mastermind, maybe 3 or 4 times ago, I'd asked everybody, who thinks it might be lower in 1 year? We had 30%. Who thinks it might be lower in 2 years? Maybe 15%. And in 5 years, we only had one holdout of somebody who thought real estate prices would be lower in 5 years than they were today. So, it's a game of having conversations with your past clients. This is a perfect excuse to talk to them. And it's talking to them from contribution. Because how cool would it be, Eric, if your client who has 3 kids, they're just going into elementary school, bought 3 houses, and when they went to college, they could flip those houses and pay cash for their tuition. How's that for a vision board?
Well, we got lucky this year, and I have about 4 or 5 clients who did exactly that, Rob. But I have to identify who has the money, who's got a head for that. And when they come up and say that the prices are going down, I say, well, there's 13 offers on this one property alone. I said, you need to win it in order for you to even make any money on that, number one. And number two, if you improve that property, it's been shown that 90% of people who improve properties will make money on it. And 70% of the pundits that say that there's going to be a downturn have been proven wrong. So you can be on the right side of that or the wrong side of that. Number one is, you'll make money in real estate in 15 years. Don't look at it in terms of 1 year or 2 years. If that's your horizon, you're probably not, it's probably not for you, and do the takeaway at that point. But they want to do it. They all want to try,
Yes. And you feel like you're selling when you're just giving them this information and trying to help them, or not?
Well, I try not to, but it's inherent to make money to be a salesman in our business. But it's really I try to be a trusted advisor, and offer them my own experience as well as, what rich person doesn't own real estate?
And Eric, you and Jackie did you buy more than one or just one unit recently?
Well, we have 4 or 5 right now.
So 4 or 5 units. So you're living proof.
And I got to tell you, the rentals, which were surprising over the last 2 years, have gone up. And I don't know, they just don't seem to stop. I think rentals are, that's driving the market of investors right now. They see those rentals. That's the only thing going up. My 401k is going down and the rentals are going up. So go figure.
And the truth of it, Eric, is if you talk to 10 people and only 2 people, this was really the right option for them. You would be like the top RE/MAX agent in the entire state if you did 2 sales a day.
But we were.
And that would be failing 8 out of the 10 calls, but you're educating people. And if you educate them and it's not right for them, you've still built brand equity for the Funk Haynes team, or, like you're building that value.
Well, the Heart to Home team is about helping people, and if it can help them by investing, and that's what we want to do. We don't want to push people into doing something they're uncomfortable with. It just doesn't work, and they back out and things like that. We don't have time for that.
Well, yeah.
Another advantage to the rental market is if you're near a college, you can't miss. You'll have constant rentals. And if you have a college student, it is a good way to invest and also have money for the future. Because instead of paying, what do they pay, $1,000, $2,000? I think my granddaughter's paying like $2,700 a month to share with 4 other people in a house that they're renting to go to school. It would have been a very good investment if my kids had invested in that property, and they would have been collecting the rent now and in the future. So there's a lot of good to talking to people about investments, a lot of different ways that they can profit from it. And advance from it. And the rents in Florida have never been higher.
So Colleen, you have more than 5 years experience in real estate, so you probably know this fact. Of the people that choose to work with a real estate professional and complete a transaction, what percent do you think are satisfied with the service the agent provided?
That's well, working with a professional.
So if we look at
Yeah.
the studies that NAR did with
Yeah,
people who
that's-
closed, the number is in the low 90s of
Yeah.
people who are satisfied and say they would work with their agent again. Now, what percentage of those people, Colleen, actually do their next transaction with that agent?
Less than 10.
Unfortunately,
It's
a lot
between
less.
it's between 8 and 12%.
Yeah, it's
Yep.
sad.
Right. So the bridge to ending that is not endless mailers. It's not endless emails. It's not advertising on the local park bench. The bridge to overcoming that is having a conversation with your clients and letting them know that you care about them. And even if they aren't in the market to do something, you're creating awareness where they might say, you know what, Eric, we don't have any money, but my nephew just inherited money from, his grandmother and was asking me what I should do with it. Right. Because we're also amongst the largest generational transfer of wealth with the baby boomers right now. So forget about all the free money that's been out into the marketplace, which was called stimulus. There's going to be a transference of wealth from baby boomers to the next generation, or it might even skip a generation to the grandkids who are going to be looking for some place to invest. And if we're silent, we're just not being, that full service professional that we hold ourselves out to be. And I think, Eric, you spoke so well, and you do it because you believe in it and you've done it yourself. What's a better story? And those conversations are
always
easy.
good to make money, and it's good. The market has been so good over the last 4 or 5 years, but I will tell you, if you listen to the pundits in 2016, 17, and 18, they'll all tell you that the market is topped out. Meanwhile, if you got out, you'd be looking at it and renting a house and paying exorbitant rents. I have clients like that. I am calling those people as well to see if they're ready to, increase their security.
So Eric, sometimes when you think about sales and getting paid in money, there are some people who feel like it's a little bit dirty because I feel like I'm profiteering from somebody. But I'm going to tell you that when you look at the amount of money that you make, if you are doing your business like you and Jackie do, the amount of money that you make is in direct proportion to the value you add to your clients. The amount of money you make is in direct proportion to the value that you add to your clients. Okay, it's not like you're, I don't know anybody in this organization that would lie, cheat, or steal to make money from their clients, because if they would, we wouldn't have them here, no matter what type of production that they do. That's not our culture. That's not our value. So making money is not a bad thing. Making money is a representation of how much you've helped other people. That's the truth. So when you're framing it from, hey, this is an opportunity to make a big sale, that does have a impact on you. But if you frame it from the point of, I'm going to help somebody, and then when you're done helping somebody, at the end of the day, there's remuneration for the value that you provided, instead of the other way around.
I have to agree with you, but if I keep looking at everything in terms of dollars and cents per person that I speak to, I'm thinking of the wrong thing. And I help someone who wants to buy $150,000 condo just as much as I do as someone who wants to buy $1.5 million piece of real estate. Quite frankly, the conversation is the same. The amount of time is probably about the same. But at the end of the day, I'm looking to help the person, because it just works. It just seems to work. It's easier. when you're helping someone as opposed to trying to turn a sale from some guy who just wants to make some money. I tell them, just put your money in 4.35% savings bond. Compound interest savings bank. That's probably where you should put your money if that's what you want to make money and guarantee it. Because I get that question. Can you guarantee that we're going to make money on this? And I'm like, this is the wrong conversation. So,
Eric, I'm going to share a story from 10 years ago when you got into a car accident. So when somebody rear-ended you, was that what happened?
Yeah, I got rear-ended because I was talking on my phone.
So Eric gets rear-ended after showing a property. I don't know if you called Jackie or me first or the cops, but you like, hey, Rob, I was just in an accident. I need to submit this offer. Can you call my client?
I was actually on a stretcher when I called you, and the cops, and they said to me, hey, you can't make a phone call. I said, yes, I can. And
So the deal did close, right?
the deal closed. You helped me out. I was appreciative.
So anyway, that's the type of character that Eric is. Servant leadership, Jay. Thank you. When you're doing it for the right reason, it's easy to make the call. And we need to reframe in this new year those conversations and make them more comfortable, more value driven. And we're not going to do anything that's not in somebody's interest. But damn it, like if somebody should be buying a piece of real estate and we're not doing our job by communicating with them, what's available to them because they're not aware. I mean, if you're getting your diet from the media, that's just a horrible place to do it. Like they're just trying to attract eyeballs, and bad news attracts more eyeballs. Helping people is, it feels good. After you do have a good conversation, do a good thing, you get paid. That's the way of the universe here, folks. And I will be putting together I'll do when I'm down in Southeast Florida, I'll do an hour of evaluating a couple properties real time. And this way you can have that in our resource library to see how to do it yourself if you're so inclined. If not, we have a great team of lenders, or if you're successful, you have a lender that is or is not part of our team that can help you break down these numbers so your clients can get the information that they need and deserve. I happen to love it.
That cash on cash analysis, is that something you can send to me or put up so we can evaluate that? Because that sounds like a regular conversation that I can have with someone.
So what I'm going to do better than that, Eric. I'm going to do Fazia will set a time when I'm down there. I'll do 1 hour. I'm going to ask some people to give us some properties in Florida. I'm going to evaluate them, and I'm going to do it real time. And we're going to go over the cap rate and the cash on cash return. And I'm also going to give you a spreadsheet that will allow you to ask your client, say, hey, in the next 5 years, how much do you think real estate's going to go up? You can plug in 2 different numbers and it will show you the return based on some assumptions for appreciation. I am a spreadsheet junkie. I will give you a spreadsheet. I'll teach you how to drive it, and the spreadsheet will have integrity. So yes, the cash on cash, you want to invest 100,000, I'll get you $8,400 a year return the first year. Rent goes up. I just renewed my lease in Florida. It went up 7% because that's what was in the lease. It went up the CPI or 5%. And the CPI was 7.1%. My $3,200 rent went to $3,420. It went to $3,427 and 20 cents. Okay, but you know what my mortgage did? You know how much that went up? Nothing. You know how much my interest in the payment went up? It went down because I paid the loan down a year. So this is good stuff, team. And I just want to give you the tools and resources. It's not that difficult. And Janet, you can all get the spreadsheet. I'm going to record a special mastermind. It will be on the video library. The spreadsheet link will be there for you to put the numbers in. Eric, were you on like a year and a half ago when I did that analysis with the entire group?
Yeah, that's how it got us, that's one of the things that we were already looking, but that helped us focus on it and jump in pretty quickly. Yeah, that was a good seminar.
Great. So, Lauren, I would talk to Fozzie. I just saw your question. I would talk to Fozzie about that. The spreadsheet, I will put a link to the spreadsheet. I'll put a link to the spreadsheet with this mastermind recording, which will be going on the bottom of the video email link. Did anybody see the video email I sent out today? So I sent out a video email, and I'm going to put a link on my YouTube channel with the spreadsheet underneath this recorded session so that you can get access to it. Okay. So that will be there by Monday. Fred will edit it over the weekend. It will be there by Monday. And then I'm going to do a special session where we create a new one. And I literally do it real time with some investments that our team in Florida presents to us. And the reason I'm doing Florida is because maybe people in New Jersey might have clients that want to invest not only in New Jersey, but also in Florida. I mean, I've seen people buy in Florida 5 years before they move down. Smart move. And there's that chance, Eric, get a referral fee for doing nothing, or you could be in Florida and pay out a referral fee for getting a great client. But that's what I'm going to do here, and it's going to be usable. The discussion will be, hey, what type of return are you looking for? We can get you a cash on cash return, in excess of 8% in year one. And when my return in Florida was, I want to say we're making $1,100 a month on that property I bought a year ago. And now when the rent goes up by $227, my return goes from $1,100 a month to $1,327 a month. That's an extra 2% return. My interest rate goes down. My interest expense goes down because I paid the principal down. This is a win-win-win. Like, I don't know where you lose with this real estate game. Like, you get depreciation, so you defer paying taxes on it. When you sell it, you get capital gains. You have a loan that's amortizing down while your mortgage rate is fixed and your property is appreciating. Where's the problem, folks?
Yeah.
There really aren't many.
Mhm.
So anybody have anything else that I can maybe tee up when I do the live analysis next week?
There's a reset on REITs cash flows, and they're tied to the moving money market. So there's going to be a huge shakeup in the commercial industry for property. What are your thoughts about that, Rob?
So I think that's kind of outside of where most of us are going to trade in this, Anthony. And I appreciate you bringing that up, because one thing that I will mention is when you buy 1 to 4 families, condos, and townhouses, you're buying with the residential borrowing rules, which are designed to protect the consumer. So there's no prepayment penalties. There's no defeasance. Because if you buy a commercial property, right, and you take it at 7% today, and then the rate goes down to 5%, a lot of these commercial mortgages have prepayment penalties or defeasements, where they defease the interest, where they make the spread that they were going to make on that loan for the balance of the loan, even if you pay it off early. So if we stick in our lane with residential properties, we're keeping it really, really simple, Anthony. And if you want to talk about like the REITs and the commercial markets for like multi and commercial, that's one thing. I do think that there might be some like super regional owners that are looking to liquidate some of their investment portfolio, like the Blackstones, and some of those national buyers might be looking to liquidate some of that portfolio, which will give us opportunities to introduce it to, real people buyers, not corporate buyers. Does that help?
It does. Thank you very much.
So was this helpful to at least 10 people here? Maybe we're going to change the conversations that we have and, help our clients and
Hey, Rob.
make a few bucks?
Hey,
Yes, sir.
Is there a way that you can kind of create something that we can talk to sellers about when it comes to this type of situation, when it comes to investing? Like if they were going to sell their home, profit wise, without us being in a financial like liability kind of thing, you know what I mean?
You mean people who are selling it from an investment portfolio or
So
selling
like,
the
say we're
primary?
going on a listing conversation and we talk to the person and say, hey, where are you planning on moving to next? And they say blah, blah, blah. And then we know in our head, okay, well, they're selling their house and they're making $100,000 profit. And the place they're moving is only going to be blah, 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 $20,000, Oh, well,
Okay.
let's talk about blah, 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 the rest of the $80,000, kind of persuading them to let you know that you may be able to assist them more than just that one.
So Maurice, I have an answer for you on this here. And I don't know, is there anybody that knows or might even be a career mover? Because I know people in the real estate business that buy a house, live in it for 2 years, fix it up, sell it for a tremendous profit, take that tax-free, move to another house and do the same thing every 2 or 3 years.
I got a couple of people like that now.
Right? So the conversation for a seller in that scenario where they're the owner is take your profit, take it tax-free, and then reinvest in another property with an increased basis. So in other words, if you bought a house 3 years ago and you paid $500 for it, it's worth $850 now, right? If you're a married couple, you could take that entire profit, check with your tax advisor, but I believe you could take that entire profit tax-free, buy another property for $850. And if that property for $850 goes up 100,000, okay, you only have 100,000 gain. And if you've been there for 2 years, that's also tax-free. Now, if these tax laws change, because, I don't know if anybody noticed, we're running pretty big deficits, so that might change in the future. There's an incentive to recognize that gain without having to pay taxes on it, because if you wait and you take that gain in 5 years, maybe that's going to be a taxable event 5 years from now. So that would be a conversation I'd have with the seller as to why they might want to do something.
Thank you.
Rob, the other thing that came up was a 1031 exchange. How does that play into this whole investment?
So, I mean, a 1031 exchange generally for business properties. And if you're buying properties and selling them every few years, you might have some tax consequences. And if you've had it for more than a year, you might want to recognize the capital gains and pay the piper now instead of deferring it to see what tax rates might be in the future. But that kind of gets outside of my lane a little bit, Eric, and it's more, in my opinion, relevant to business owners who have, if I have a real estate office here that I own the building and I want to get a bigger building and I buy, on the other side of town, I don't have to pay a gain to buy there if I do a 1031 exchange.
It's the same for rentals, Rob. It's the same for a single family rental. If it's a rental,
you're right.
If it's not your primary residence.
It's the same. It's the same for any investment properties. Thank you, Ellen. Yeah. But I think if we're looking at the horizon of investment properties of, let's stay in this for a long time and let's, stack them, right? Let's buy one this year. Let's buy another one next year, buy another one the following year. And possibly, you might want to sell the one with the most equity, or you might even want to do a cash out refinance on that property and buy more. This is really a fun game of Monopoly, and I love it. And I'm so glad that we still have 83 people hanging out here, learning it. And I'm going to put this online. I would ask you all to, if you go to the channel, look at some of the old stuff, you do the old, like it, and put a comment on it, because that just helps increase our reach of people getting able to see what
Your video email didn't come out this morning, Rob. Nobody got it. I didn't get it, and somebody else said that they didn't get it. So when I'm looking in at a bunch of places, so I didn't see the video email. I got a text, I got a regular email, but nothing with a video attached.
Okay, because there might have been an issue. I did it with a group, so I'll figure that out with Fred. But that's even more amazing that we had over 100 people without my lovely video email. But I will be doing this. I'll send something out by Monday morning, the latest. I'm going to try to get it out today for a session for an hour on Monday, Tuesday, or Wednesday of next week. And I'm going to ask our team down in Florida to give some investment property candidates to myself or Fazia for them to be reviewed live. And yeah, Heba, I'll add everybody to the video email. I just got to figure that out. And I'll do that live, and then that will be a resource on the YouTube channel with a link to a sheet that you don't need to recreate, so that we can have these conversations a lot easier. But
Keep it simple.
exactly. No,
Keep it simple so you don't lose us.
we're not talking about REITs and things of that nature. We're talking really simple, cash on cash, 100,000, you get $8,000 return. You know, here's how we're gonna have that conversation with our sphere, our current clients, and our previous clients. It's a great conversation.
Rob, I think what Ellen is referring to is your conversation with us. We're just basically understanding most of it. With our clients, they just lose it if it's not simple talk and how much money they're going to make.
Yeah, you have to put it in layman's terms. You have to put it in layman's terms with them.
And also, I find, like, right now, I just got a text from my client who wanted an out the whole way. They want to make sure that they can get out of the deal, and I reassure them, yes, you can get out of the deal, and I help them that way. He just said, okay, let's go forward with the deal, because we waited till the last minute to do an oil tank sweep. I said, listen, if there's an oil tank, you can get back out of the deal right away. Everything seems to work, but it took him about a month to let it all sink in and understand what he's doing. And now he's just setting up his contractors, going to rent it out. He's going to make what we were talking about. And he's got plenty of money, which just happens to be coming from overseas. They want to invest over here, just so you know. That seems to be where a lot of money is coming from.
I'm also working on a fourplex for someone. We're putting an offer in today. So we could probably use that one as a subject matter in your class.
Yeah, that would be good.
That's awesome. And before we lose anybody else, I want to congratulate everybody. I was looking at the preparing the RE/MAX reports, and I'm looking at the year-over-year comparisons. There are probably there's probably 40% of the people who have had better years this year than the prior year, when the markets are down anywhere between 15 and 30%. Like Monmouth County is down close to 30%. We have more agents that are up than are down in terms of total numbers in the office. And that's a huge accomplishment. And Glenn Baker had reframed it for me. I said, congratulations on, an outstanding performance in a down year. And he's like, what do you mean a down year? And I was like, you know what? You have to be careful how you speak. And we have a lot of recipients of Circle of Excellence. I don't believe we have that acknowledgement in Florida, but the RE/MAX awards are going to be awesome. And we have such a great team of positive people, and most of you are on these calls every Friday. So thank you and congratulations, and look for the email with the post to next week's session, and I'll try to put the spreadsheets on there as well so you have them in advance. Have a great weekend, everybody.